So after making $75 earlier in the day on the what was it on the YM, I managed to give all of it back on this trade on the ES, and I'm a bit stubborn here. I still think this is. I'm looking for a short here. I'm looking for a short, but the market, as you can see over here, the market has just gone up and up and up and up and up and up and up. And did I mention up? It's just been going straight up at a huge. It's like a very strong V-shaped recovery, and it's like if you look at the daily, just go here to the 1 day chart. Let's just look at this. Well, look at this. We've had one, two, three, four. What happened to my screen? It disappeared. Okay, four, five. No, hang on a second. I missed something here? Let's try this again. One, two, three, four. That's not one. Five, six, seven, eight. That's not one. 9, 10. So 10 out of 12 days have been green, and the red days have been tiny relative to the green days. So it's basically been 12 days nonstop up. That's like normally you get the drop off is pretty significant. But the recovery here is super steep. And so it's certainly V-shaped. But what's weird is that normally the sell-off is quite steep, and then the recovery takes a long time. Relative to the sell-off, it takes longer to claw its way back up. This has just been straight up. It's very bizarre. Anyway, so when I'm looking at all of this thing, thinking, well, it's got to have a relief like a relief sell-off at some point. And I've just been wrong about the point. And so what I thought here was, okay, now it's getting back. It's not at all-time highs yet, which is right up around here. But the 7,000 is a significant psychological level. If it goes to 7,000, chances are it'll bounce back a little bit. At least that was my thinking, naive though it may be. That was my thinking going into this. And so I said, fine, I'm going to go and look for an opportunity to short this after it's hit 7,000. So again, I'm back looking at the 5 minute for this. So let's let this play out here. Let's speed this up a bit. And let's see where we are. 0, boom. All right, now right here is where I have an opportunity to get in. And this is me trading this on the 5 minute. So I'm going to go short right here at 7,001. Is that right? I think that's what I did actually, 7,001. Yep. Okay. And so that's where I went short. And oh, you know what? I didn't do it with 2 contracts, though. I did it with 1 contract. Let's change that. All right, back here to 7,001. Good. Let's let this play a bit here. Filled. Okay, now I put the stop at 7,011, which is actually pretty nice. It's a nice tight 10 handle stop. Is that what I actually did? You know what? That's not what I did. I remember thinking to myself, because this was actually late in the day. This was just shortly before, half an hour before the market closed. I said, I'm going to let this run overnight. And therefore I left it with the full 15 points, 15 handles. I left this at 7,016. That's what I did. And then let it run. So let's let this go. And you can see that it flirted with the idea of moving in the right direction, but not too seriously. Move, what, 2 points, 3 points? Yeah, and that was about it. At this point, it's back. It's hanging out, doing its thing. Now, I had a number of opportunities here to say, after a lengthy period of time, it's not doing what I want, I could get out. And it's a reasonable thing to think that if it's just not behaving the way you're expecting after numerous bars. Oh, by the way, the market stops from 2 p.m. Pacific to 3 p.m. That's the 1 hour a day that the futures market is closed. And so it opens back up again. And even once it opened back up, it's like, no, we're going to hang out here at 7,008 and not come anywhere near your the levels here. Unfortunately, it then just turned around and didn't make for a very good outcome for me. It just, the market is filled with helium here. It's just not going to go down. And, and and so I've had to pay the price for that. Now I thought for a while that that was looking pretty good by leaving the stop at 7,016. Maybe I was buying myself a chance. Indeed I was buying myself a chance for it to move closer to even and possibly profit. But in the end, that didn't work, and I ended up just stopping out. I don't quite remember exactly what time of day it was that happened, but in fact I don't remember what time of day it was. Long story short, this stops me out, and I end up taking the full 15-point loss. You can watch it if you want. I'll leave this running, but that was the nub of it. Took the 15-point loss, and that canceled out, unfortunately, the very trade that I'd made earlier in the day where I made $75. Here I've lost 75. So easy come, easy go. So, there we go. Wasn't that fun? Just shot right up there, took me out. End of story. And so that was the ES on was it Tuesday night? Last night. No, not last night. I can't even keep track of it anymore. I think it was yesterday. Now let's fast forward to this morning, and let's see if we can do that real quick here, because I ended up taking. You're never going to believe it. Let me just forward to this so that I can poke fun at myself without being distracted. 641 is good enough. Yeah, you'll never believe what trade I decided to take here this morning. I decided to go short the ES. Yeah, I'm surprised as anyone, really. And at this point, I'm saying, come on, for heaven's sakes, it's got to turn around at some point. And it seems like I've put up with all of these other losses. I should eventually get this thing. Yeah, well. Anyways, so let's just figure out where I got in here. 2 minutes, minute and a half, minute, 30 seconds. Okay. All right. So something weird happened here. This was actually, I shouldn't have advanced it that far because I want to show you this. This is actually slightly interesting. Let me let me revert that, wind it back a bit, and let's play it again. I'm going to get down to about 30 seconds left in this bar because it faked me out. All right. So right about here, I can see there's 21 seconds left in this bar. And I know that I want to put a sell order in right around here. And just as I was about to go to put my sell order in, and I'm actually going to put it in at 7,006 because that's where I ended up getting it in, 7,006. And you might be wondering, well, why on earth would you be way down there? You're supposed to be putting it in up here at what essentially would have been 1, 2, 3, 4, 5 points higher. Well, funny you should ask. Let me go back to real time. I've been playing this at 1,000 times speed. I'm going to play it at 1 times speed, and you'll see what just as I was in here trying to get my sell order positioned, suddenly we had this big spike down. It's going to make a liar out of me now. Maybe it doesn't. You know what? Isn't that? Okay, 5 seconds. There we go. Boom. Just like that. So I was just to get that in there. In the last 5 seconds of the bar, it just jumped down at full speed. Anyway, long story short, I got filled at 7,006. And actually, that's not true. This is a bit stupid. This is actually an execution error. I was a shade early. I saw it jump past where I meant to get in. So I quickly did a sell market order. That's what I actually did. I did a sell market order because it jumped past where I was going to get in. And so I said, all right, I'll eat that 5 points. But what happened actually is I got in, but if I'd been trading this properly, I would have been putting my sell order below that bar, and that never triggered. So interestingly enough, I wouldn't have gotten into this trade. It was an execution error that got me into this trade, even though I had every intention of getting in 5 points earlier. Nevertheless, if I'd strictly speaking waited for the bar to close and put the sell below that bar, then I would never have gotten into this trade. Anyway, that's a long-winded way of saying I got into the trade at a worse price than I'd expected, and it reversed on me. So, oh, by the way, I have to move this up to 28. That's 3 points past the 25. And by the way, that means I'm taking 22 points of risk. And 22 points of risk is more than 15 if you're in trouble with math, like I am. So that wasn't great. I took a larger risk than I meant to by a good 5 handles. So it might have been 2 points more than 15 that I like if I'd gotten in at the level that I was thinking. But legitimately, this is a trade that I would have bypassed because the risk would have been too high. And sure enough, the helium-filled market here is just reversing on me. And it didn't take too much for it to turn around and blow me out. Now, I want to show something else at the same time because, oh, what the heck? Let's look at it. So over here, in the meanwhile, we have the YM. And the YM, now the YM I can actually zoom in on because it's a spot where I can zoom the screen. Here, I was thinking, all right, well, if the market is just going up and up and up, then if you can't beat them, join them. The thing I liked about the YM is that it already sold off rather a lot. And so I thought if it's still going to go up, then the YM has more room to catch up. And so I was looking for the opportunity to get in right above this green bar, which I did do. And I got in at, what was the number? 48,616. So there, that's where I got in. And I thought, okay, well, if it's going to go up, at least this may mitigate some of the loss here because it was looking like I was going to end up with a full loss. So let's let this play. Now I'm going to actually zoom back out so that you can see both of these because they both do their thing in sort of in parallel. So for a while, that looks like a pretty decent idea. Wow. Now, as you can see over here, I've just been stopped out for the full 22-point loss on the ES. So once again, my attempts to short this market have failed. So, okay, now let's zoom back in over here. And I thought, okay, well, fair enough. If it's going up, it's going up. Let me keep an eye on that. Oh, this, by the way, I adjusted to be 20 points below. So this would have been at, whoa, let's see, there. That's where I put this. And sure enough, it looks good for a brief period. But then just to put insult to injury here, actually it's more like injury to injury, it stopped me out as well. So even the mitigation ended up stopping me out. So I had a full net loss of, I don't even know, I haven't done the math. So I lost 22 points on the ES times 5 is $110. And I lost 76 points, 2 contracts, that's $76. So 100 and, what did I just say, 110? So 186, is that right? $186 today and that's ignoring the 75 that I started with, which basically gave back yesterday's 75. So yeah, I mean, yesterday ended up not being a positive day. It ended up being a wash, 0, and today was a minus $186. So sometimes the dragon wins. Actually, it's interesting. The first couple of weeks of this month have been very easy. Were very easy markets to trade because the setups were good. The market did what it was supposed to do, made money. It was relatively easy. The last couple of weeks have been really quite hard, and the setups have been not very good. And as a result of them not being very good, I've been taking what are essentially lower probability setups, and the market hasn't behaved. So it's been harder to trade. And so this is actually what I want to capture in doing this $1 million experiment live in real markets, is that in fact, some days, some weeks are easier to trade than others. And it's important to see that because, if you got into this in the first week or two, you'd be thinking, oh man, this isn't as hard as I thought. This is pretty easy. I can do this. And then you'd be run over by the last couple of weeks. But conversely, if you started out with the last couple of weeks, you'd just probably give up before you started, thinking, oh man, I can't do this. And what's interesting, and that would be unfortunate because you're missing out on a lot of setups that are available. And so the thing that we need to establish is that on balance, this is tradable, but it also requires you to, or it invites you to exercise more discretion in which stocks or which setups you decide to take, because not all of them are equally good. And being able to tell the difference is an important skill. And that's the skill that you develop over time. And so going through all of this and recognizing what works and what doesn't work, that's a key part of what we're trying to do here.